So you can be audited even if you have a profit in your business. You can certainly be audited also if you have a loss in your business. If that happens to you, if you are audited and you've had a profit in 3 of the last 5 consecutive tax years, then the burden of proof is on the IRS. The presumption in that audit is that you are a business and the IRS has to prove you are not. Okay. So, of course, you still need your books and records and you still have to prove it, but the burden of proof is on the IRS. Now, how does that profit loss, hobby loss rule go when you don't have 3 out of 5 years profit? Here's where a lot of accountants tell you the wrong thing or misunderstand the tax law themselves. It does not mean that you are a hobby, okay? It does not mean that. There's nothing in the law that says that. What the hobby loss rule means, if you don't have a profit in 3 of the last 5 years, so say you have 4 years of losses or 3 years of losses, it's a shift in the burden of proof, okay? So now what happens is you can be audited and probably your odds of being audited go up. I mean, frankly, that part may be true. And your accountant may be trying to kind of steer you because they don't like that, right? And that's fair. But it doesn't mean you're a hobby. It does not, okay? Many businesses have more than 2 years of losses and are absolutely legitimate businesses. And I'm not just talking about sole proprietor painters like me. I'm talking about Uber. I'm talking about Anthropic, like, Microsoft, like enormous companies. This is the norm. Of course, they're profitable now. But this is the norm, right? A lot of businesses have a lot of losses. So what it means if you are audited and you don't have 3 out of the last 5 years profit, it means the burden of proof is on you. It means now the presumption is that you are a hobby, but you, under a court of law, are allowed to prove that in fact you are a business.